Chase by Dallas, make it hurt.
Hey guys, welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. Here on this Wednesday, Education Wednesdays, I wanted to drop in again and just have a quick chat. Currently out running around. I got my prospecting clothes on, just looking to see what opportunities are to invest in. As I'm looking at options to acquire that are going to be for affordable and workforce housing. Looking for opportunities that probably been passed over, things that I'm seeing based on knowledge that I have and stuff like that. But nonetheless, I did want to check in, have a brief discussion here. Where I had a conversation about retail. As you know, people were chasing yields. Well, not people, but investors are chasing yields. And here recently, there's been a higher activity of retail product coming across my desk for investment purposes. So I wanted to kind of check in and give some insight or thoughts on that. Especially because, as you guys know, and I always talk about, I follow where the big guys are putting their money, the larger investors with the institutional money, because they're going to see trends way in advance before, everybody else catches on, because they just have so much product. They can do so much more analysis and get feedback. And one of the companies that I always dig into, because I also invested in from a stock perspective, is Blackstone. So they had a recent report out where they were talking about now they're going to start pivoting a little bit with some of their funds and looking to take advantage of, obviously, hotels, which have been hit, as now they're starting to see that they're very bullish for the long-term recovery, and so they're going to be making big plays in that. They're also going to be making plays in some retail product, but mostly stuff that has, shopping center or grocery anchored. In a sense, with credit tenants that they're going to be looking at, because grocery anchor stores did extremely well, obviously, during the pandemic, because they were essential businesses. You still need to get your food. So they're going to be looking heavily at that, and that cap rates for a product like that will range anywhere from 6, 7.5, in some cases, on the anchor, a 5.5 cap. And so one thing I wanted to point out, because stuff that I have seen coming, you'll start to see the words highlighted with that, shadow anchored by such and such, HEB if you're here down in Texas, Walmart or Kroger's if you're in Texas. I know they're in some other locations, but this platform is US wide. So pay special attention to actually where these products is located. One thing you want to also consider is, the U.S. has an abundance amount of retail per person compared to other countries, and that also, with anything, commercial real estate is local, right? So understand your local market. Figure out, hey, is there a gap here? Is something missing? And even through all the pandemics, you pay attention to the videos. Rents for retail product didn't get any cheaper, especially if you're in the areas of where there's a high amount of traffic, great visibility. You have great feeders, which basically means your discount stores, your grocery anchors, your restaurants that are prime attractors, entertainment and stuff like that. So those rents for those particular areas and those particular shopping centers, neighborhood power, you name it, those rents didn't decline They may have offered a little bit more in TI. They offered some free rent, but the actual rent, base rents, held pretty steady. But with that being said, like I said, pay attention if you're a person that's interested in owning retail real estate. Understand the mix that's already there, what mix can be added, what's missing in that area. Because again, like I said, with retail, it's about serving the local community. So what is missing, what is needed, what type of demographic is being served. You'll see some stuff that I've seen that's very, if you didn't know, the location has a strong Hispanic, Latino community. So the same type of going retailers that you would think of going there won't necessarily be the same type that actually serve that community. So you have to get a little bit more specific. You have to understand, who are the major brands, the major players that will work for that community. And what I would always do is I would go to a community that already has, it's pretty vibrant as far as retail, great activity, very few vacancies, and I would see what type of retailers there are, and if there's any way I can get that same type of retailer business in the location that I'm considering that's being offered. But definitely, location is always going to be key, because even I got fooled a little bit when I saw a product that I was looking at in Houston, because I was so happy to look at some multifamily opportunities there, and that name popped up, and so I looked at it. The pictures were glossy, but then when I looked at the actual product, I mean, it's pretty much on an island. There's literally nothing by it. It's just really off the street. There's great demos there, but other than that, there's nothing else that draws you there. So you have to be definitely a little bit more local to understand the whole dynamic of that. But they did have a credit tenant, which was Wells Fargo. But then I had to look up and find out what their deposit, because I believe what ended up happening is they're going to they relocated from their original location to that particular development. Now I had to do some more digging to figure out why all around it is vacant. Maybe there's a huge residential development coming. I'm not sure, but at the time when you look at it, there was nothing there, and that's the only retail spot right there. Everything else is pretty much some type of housing or just vacant land all surrounding it. And I know from talking with lenders get very nervous when they see, something that you're looking at to purchase, and there's a whole bunch of vacant land around it. There's nothing else coming, nothing else there. There's no synergies, no energies, nothing like that to go off of. So that means they're going to either not offer, or you're going to get a very, very, very low LTV in the 40s. Just tell you that from experience. But nonetheless, I still believe retail there's opportunity there. It's just about figuring out what works. Speaking with brokers, actually drive by, see what the parking lot looks like during the week. Because another thing is that I'm consulting a client about locating a particular concept they want to do, and I hone back into, hey, based on a certain amount of rent numbers, based on the concept, will you be able to achieve those numbers in the next 2 to 3 years? Right. So that's kind of the same thing approach I would take as far as like, what can fit in certain locations if there's a lot of vacancy. Because vacancy presents opportunity, but you definitely got to be prepared for it. You got to have the reserves for it, the TI dollars for it, and then you got to have the right team or team of brokers to bring that particular tenant or advertise for that particular tenant to come there. But nonetheless, again, the location, the visibility, talking to him about the parking, tell them that, hey, there was a couple of locations, a couple of businesses there that did well during the pandemic and were doing well beforehand, but there has been a lot of turnover from other restaurants because, again, the density isn't there yet. It may be coming. it's a growing area that he's looking at. But anything could happen. But right now, the density is not necessarily there for the type of concept that I think that he's trying to put there, that you got to get the type of revenue there to pay for that rent. And so the only other option is to really go smaller, which is one thing they didn't want to hear. And actually work on becoming a brand, where you become the destination. Like a Dave and Buster's, like a Main Event, like a Punch Bowl Social, or things of that nature, or Top Golf, where if you notice where Top Golf's are located at, other than there's sometimes, because they require so much land. I know they believe they were working on a concept that's a little bit smaller, so they can be in the neighborhoods a little bit better, fit into neighborhoods or communities a little bit better. But other than that, when you see these top golf locations, man, they're pretty much on an island. So when you're looking to buy these things, even though it's a credit tenant, you're buying it for the dirt, not necessarily, because you're going to end up having to, in my opinion, demolish all that down and look for mixed-use development or something like that, because to date that I know of, there's not necessarily another tenant that you can come in and backfill that particular type of, not necessarily location, but structure, to where you have a whole bunch of green space in the back, and then you have the actual retail building, other than it being maybe another type of entertainment business. But again, I don't know, what that is from a standpoint of like the facilities where you have the arcades and the racetracks and stuff like that, because there's so much land back there. Maybe the other concept is you turn it into an office, but then you really gotta understand the office market, because during the pandemic, businesses that did end up leasing space, they had a flight to quality. That's usually the case in the office. They go to the better, best product. They go up a level because they're thinking there's an opportunity there to take advantage of the landlords, get extra TI dollars, free rent, which, even during the pandemic, a lot of your quality products in office held their rent, but they were very aggressive to tenants on offering, free rent, a lot more TI and dollars taken on over to get you to sign a long-term lease. And if those that have been paying attention to news on that, according to reports that I've been reading, especially from the big guys, a lot of the companies now are starting to, they kind of figure out how they're going to use space, their space. Maybe they're starting to feel more willing to sign those longer-term leases. So, before they were more flexible, short-term. Now they're gravitating towards more of getting a better understanding of what they're going to do, how they're. Yeah, we want to help the clients, so all the way around 360 with their particular business. So, nonetheless, do your due diligence, dig a little deeper, go below the surface level. Opportunities are there. The economy is open. Well, most of the economy is open up. Although you have been hearing rumors about this variant. Supposedly it's supposed to be a little bit more, but I don't think these the local governments are going to do another shutdown or anything like that. I think they're just going to be one of those things where you have to live with it. Will it be the next shot? Who knows? There are things that are bubbling up. Affordability is the biggest thing, because things are going to get more expensive if they haven't already. Well, they're already more expensive. But people are getting back out. People booking flights. Heck, we even book flights for vacation as well. So I know, I'm doing it. I know plenty of other people are doing it, because the airline tickets have been jumping up, either from demand, but they're having shortage issues with trying to get people to work. So that's a whole other discussion. But nonetheless, as always, share, subscribe, leave a like, leave a comment. Let's continue to work together. Like I said, this is a platform for us to have a discussion about all things commercial real estate. I'll do my best to provide, insight, talk about certain topics, things that I'm seeing, things that I'm learning about, just to be a resource, to be a help. As I say, I want us to come together, collaborate, to help us, acquire income-producing assets for those that want to be developers. That's a whole most part, income producing properties, commercial real estate properties, the cash flow day one that we can make change to, add some value to, enhance the community around, and then use that cash flow to fund the things that are most important to us, and continue to build from there, support the community, use proceeds to help invest in other businesses that for people that look like us, and continue to push this thing forward. So if I can be of any help, as always, leave a comment, reach out. I'll do my best. I'm always learning. That's one of the great things about commercial real estate. It's never a dull day. There's always something new to learn. It's not as, entertaining as you would see like with stocks and stuff like that, because it's on a daily basis. But nonetheless, things are happening, things are moving, things are progressing. As one guy told me, people are always making money. It's just, you got to figure out where, regardless of the type of economy, good, bad, up, down, left, or right. Somebody's always making money. And like I said, I always look and see what the big guys are doing. Typically get some insights, read their information, their reports, and just get an idea and figure out how can I put that on to the level that I'm at currently, and then with the goal of getting to that particular level as well. So until next time, happy investing. Like I said, leave a like, share, subscribe. Let's continue the conversation, and let's get it. We can do this together. I totally believe it. We've done it before. We can do it again. So until next time, peace.
These by Dallas make it hurt.